right, joining us now, live on the couches to talk more markets, is George Rusnak. He is co-head of Global Fixed Income Strategy at Wells Fargo Investment Institute. George, thanks for coming on.
Hey, thanks for having me.
Let's start with tariffs and trade. We were just talking about this with our colleague Rick, but supposedly now President Trump at least saying, although he qualified it, I guess, but at least saying he would consider some kind of interim deal with China, and you have to keep adjusting the goalposts on what we can really expect from a deal.
It is. There's a lot of adjustments that are going on, and it's affecting all types of markets, certainly affecting the bond market, and the question is, where do we end? Our base case right now is there might be a deal, but more likely in the first half of next year. But it's challenging if you think, especially for businesses that are in the middle of their CapEx season, where they're trying to build out and plan what their capital expenditures are going to be. The uncertainty associated with it kind of leans them to pull back, unfortunately, and it's kind of hurting our growth a little bit.
So speaking about that trade deal, do you feel as if the markets have been a little bit overly optimistic every time they get just a crumb of news about that trade deal? Because really, the trade deal has gone nowhere.
We agree with that. It's really hard to assess what it's going to look like. I guess our concern is that you may get a trade deal, but more importantly is what's the context of that trade deal and the specifics of it. We're concerned that some of the deeper dives on it, the fundamental issues of state-owned enterprises, intellectual property, and even tariffs themselves coming off might not be addressed in the trade deal. You might get a trade deal light, and that could disappoint the market. So that is one of our concerns.
George, despite all of the uncertainty around trade, slowdown on the horizon, I just can't help but think about how equities are within spitting distance of record highs. So what's the next catalyst for the markets? Are we going to continue even higher? Is there even more room to run at this level?
So there's potentially room to run at this level, but I think the markets are trying to separate themselves between some of the chatter going on that we're discussing about with the trade deal and the actual fundamental economy itself, which is in itself fairly strong. Is GDP or growth down? Yes, but it's still pretty robust. Is inflation low? Yes, but actually we've seen CPI and PPI pick up a little bit. So overall, and certainly the unemployment rate is close to, if not at, full employment. So some of the baseline statistics of the fundamentals of the economy are fairly strong, and I think that's what you're seeing reflected within the equity market.
Before we let you go, I want to ask you, when we talk about equities, we've got so many recent IPOs that looked hot at first, and now Uber and Lyft way down since their IPOs. Just yesterday, Smile Direct Club. Now we saw Inez say it's up 5%, but terrible debut. What do you make of that overall? We led our markets newsletter this morning with the same thing, a take about how these tech IPOs that were so hailed going into 2019 have mostly not fared well.
I think it's more of the uncertainty that you're seeing kind of play out now with individuals potentially, right? So you saw some of the concerns in the market and the idea of the trade deal play out on the business side. And if you start seeing that playing out on the consumer side, that becomes more concerning for the marketplace, and that might be a reflection of some of that.
There it is. Okay, George Rusnak, thanks for coming on.
Thanks for having me.